We have our own firm outlook, but I can guarantee there's going to be some story, right? Last year, it seemed like to the allocation piece, like everybody's talking about their fixed income allocation. Rates are moving everywhere. It's a volatile environment. Bonds are supposed to be safe. What's happening in my allocation? And then we see the start of the year, the 10-year U.S. Treasury was at 3.8%, and the end of the year was at 3.8%. Like, it didn't move. It was just a little bit rocky along the way. So I think patience is going to be critical this year. You know, coming out of 2022, to comment on our clients, we do a lot of work with endowments and foundations at our firm. You know, they have a certain spend rate. They've got to beat that spend rate and inflation to exist in perpetuity, which is a mandate for a lot of them. Coming out of 2022, that looked tough to do, right? We had a high level of inflation. Markets dropped. They got to spend the same amount of money. That spend rate's up. So last year, they needed the returns of the market last year. And I think a lot of them, you know, and others are looking at risk-adjusted returns in cash and like, well, why would I, you know, take risk and go out on the spectrum, extend duration, go in equities? But I think maintaining that allocation and saying like, look, yeah, risk-adjusted returns are great in cash now, but we need to invest for the next 10, 15, 20 years. Let's not reduce our exposure to longer duration or, you know, U.S. equities or more risky equities or emerging market equities because we need those sources of return for the long term. And, you know, really being there as a source of advice for clients and making sure they understand this year is not going to dictate the next 15 and staying strong in that allocation that we set on the front end is really a big part of our job.